Hello everyone, this is Evan here from the Trade Risk on Friday, May 27th with a weekend market recap video. We're first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names. Now, we're going to start this video off with a monthly chart here, and I got some statistics written up here, and actually not statistics, just levels. And I want to point out where we are in relation to the highs. Look at this big pattern, kind of the forest instead of the trees right now, because we can easily sort of lose sight of the bigger market structure at hand here. So the 2015 highs for the S&P 500 come in at 2134, and they were made exactly a year ago. It was back here in May of last year where we made these highs of 2134. This is the cash market S&P 500. You can see right now we closed at 2099. That puts us about 1.7% away from the all-time highs. I think in my previous video I may have misspoke and said we were only 1.25% away. Turns out we're about 1.7% away from today's close from the all-time highs in the S&P 500 cash market. Now, also another interesting note here is the highest monthly close was last year, May 2015, at 2107.39, and you can know, and if you look at that number and where we are now, we're only about 0.3 or 0.4% away. There's 1 day left in the month. Markets are closed Monday for Memorial Day, so Tuesday is the final day of the month. That's when we could potentially make a new all-time closing monthly high in the S&P 500. So this is sort of the broad picture where we are, where we sit on a monthly time frame. You can see last month, mostly sort of a digestion month. We tried to push higher, failed, came back down. And it took us all month, but at the end here, we're starting to push towards these highs and make our way back to some of these levels that we talked about in here. Now, let's move to the weekly chart. You can see a great looking weekly bar here, punching through sort of this trend line that's coming off of the highs here. And it also is a firm breakout from the past 4 weeks of consolidation that we've been in. Basically, the tail end of April and then all of May so far has been this slide lower, very controlled, very methodical, looked pretty dicey at times here a couple of weeks ago, last week in particular, but of course we've discussed that at length now, that false breakdown from last week, and with that we gave us the fuel to sort of push higher here. So certainly still significant supply up here as we approach all-time highs, but there is absolutely momentum on the bull side right now, heading into next week, closing out the month of May. Now let's go down to a daily time frame and take a look at sort of the pattern here over the past few days, and you can see once again we broke this trend line. Let's go to the SPY because we have some more lines drawn here. We broke this trend line. Really the key day was Tuesday. We talked more about this pattern here. You can go back and watch the previous video, midweek video that we did on Wednesday, discussing more at length all of the action in here, but for now in this video we're going to just take it from here, and this breakout bar, certainly a day to take notice. And then you can see we've basically levitated higher here, and we haven't really retraced anything. We've kind of just mulled along higher. This is off the heels of sort of the Fed, which is now more hawkish than the market believed, and political uncertainty. Amongst all these things that would make us think that the market can't go higher, the market is in fact going higher. So there's momentum on the bull side. We're coming into some very big levels here. Things look pretty good. There's of course something for both ends here. The bears may hang their hats on. They need to clear all-time highs before we get the all-clear signal. We'll have to see how it goes. For us, the way we've been playing it, we've ever since this day here, we turned around and progressively have gotten more and more bullish. Basically, every single day that after this reversal, we've basically increased long exposure and been rotating in and out of names. We've taken profits, we've moved into other names, and we're sort of aggressively positioned here, as we have been all week, really, looking for more upside. I think there's signs here to say that this breakout here looks promising. Now, again, the highs right here from April April 20th at 210.92. We still haven't hit those yet. We've made a new closing high in this trend because we only closed down here at 210.10. So we did outpace that today. That's promising. So now we just need to see, can the market pull through and push through to the next nice round 211 number, or is this going to turn into some type of trading range, a bigger trading range that we're going to start trading in for the next few weeks. So that's sort of the way we're looking at it here. Again, I think you need to respect the momentum and then just keep an open mind, have your stops in place. But I think now is certainly a time to get on board here. Again, weekly time frame and some of this bigger term structure. I like the way we're pushing up here. Let's see how we act heading into the last day of the month. Now, if we look at some of the other indices, IWM, for example, you can see we broke out here just the same on this on this week from this trend line down here. We're coming back into the April highs. IWM on a larger time frame, certainly more damage. This had a more significant pullback off of all-time highs, so we're not quite there yet in the small caps, but they are recovering ground. They are heading back up here, and they are breaking some trend lines. I don't have them drawn on this chart, but if we were to extend a trend line down here from the all-time highs in the IWM, you could see we are breaking above them. And we probably should use the actual spot index to draw those lines a little more concretely. The Qs, you can see, also had a very nice week as well. We filled this little gap in here back from the 22nd of April, and we are pushing back to these April highs. Once again, this index also did have a slightly more severe sort of pull off the highs here as we started off the January 2016, mostly, fear of growth. I think these names were hit a little bit harder, but we're starting to see that normalize, starting to see us head back to those previous high levels. So all around, we're seeing a lot of participation here across all the indices. The S&P 500 is the only one that is looking to head to that is closest to the all-time highs and potentially ready to make a run at them in the coming weeks. Now, if we look at some of the individual markets here, we'll talk about bonds first. TLT, you can see still just mulling along in the middle of this range here. Hasn't really made up its mind. Is it going to head to the lows? Is it going to head back up to the highs? We're still short TLT. We took a little bit more off the table. We got about half of our position on right now. Still looking to see if this can roll over, but it is taking its sweet time, so I'm ready to sort of cut this one off if it does start to rally. But for now, still short TLT. Just for a trade down here, like we say, longer term, still looks pretty good. So we'll have to see how that one progresses. Go to USO, another one that we're still long here. We've been long this for a little bit of time now. Still working itself higher. Saw an open gap lower today. The bulls came to the rescue. Still buying dips. USO still seems to be kind of trending higher pretty cleanly, I think, in all respects. So we'll have to see if it can make another run at that nice big psychological $50 level. I like all the pessimism out there in USO saying it can never go above $50. The hedgers are just going to go crazy on it. It's not allowed. I like that type of thinking for this long trade. So we'll stick with it until it doesn't work anymore. UNG still struggles. Nothing new here. It's just basically staying depressed below the 8 and 20 moving average, below some of these key trend lines. My thoughts on this. Has to get back above $7. Gold, back to the lower end of this range. Looks like, it's got a small bounce here Friday off of what was support back here in early April and late March. So we'll have to see if this can hold down here right around 115. If you look at the weekly chart, you could see coming back down to retest this trend line here. You do want to see, if you're a gold bull, this remain as bullish and constructive as it possibly could be. You'd want to see the support more or less hold here. You don't want to see us retrace deeper. That would give you a little more concern. So we'll have to keep an eye on this. Pretty actionable support area right here. If you're interested in gold, keep a close eye on price action heading into next week. If you want to try and buy this dip, might be interesting. Silver, this one is, in that stage where it is starting to pull back a little more than maybe some of the bulls wanted to see. If If you go to the weekly time frame, though, it is still pretty constructive, sitting above the 20 period, below the 8 now. So again, you'd want to see the dip buyers kind of step in here sooner rather than later. So we'll have to see how this one plays out in the coming weeks. And the US dollar strengthening quite a bit here on Friday, firmly back into this old range. Looks like we're on pace for a nice bullish engulfing bar at a very critical level of support. Very bullish sign for the months ahead in US dollar if that can stick. So that's sort of the read there. If it loses, 24.50, 24 and a quarter, then you probably want to get concerned again if you are a US dollar bull. Now, if we look at some of the individual sectors, I'm not going to go through. Most of these are performing pretty well. Like we say, there has been a nice cumulative participation in breadth. There's been a lot of support across sectors. I think the two standouts here, semiconductors, quite a bit of strength here. Look at these candles all week. Especially these two here back on last Friday, the 20th, and then followed it up on Tuesday. Those are big expansion buy bars there. Weekly chart, you can see. Look at how cleanly, and aggressively buyers are stepping in here, taking out prior resistance. Still not at all-time highs, still in the midst of this range, but certainly starting to really outperform and shine right here. So semiconductors on fire, maybe slightly stretched here, but I would not want to fight that momentum. I'd want to be looking towards these types of names to get involved in. So semiconductors standing out, and financials standing out, not as aggressively, but still doing a lot of big, heavy lifting here, breaking some critical support. We've talked about this downtrend line that extends off the highs here. Constructive to see the financials back in play. These were the most beaten up sector, the names coming into 2016, so they are sharply recovering. That's good to see. And those by far are the two standouts. Amongst others, there has been a lot of participation amongst a lot of these different sectors. I think that the laggards, and again, not even in a horrible way, but energy, maybe slightly, you'd expect it to maybe be taking out or challenging the April highs. It hasn't quite done that. It is finding support again. Just nitpicking here, trying to say maybe they're not outperforming and leading the pack like we may think that they would. They've had an impressive run. Of course, this was a very beaten up sector as well. But you can see they're not quite at the April highs here. That's all I want to point out. And then utilities, some of these defensive names and even the staples. Again, they're acting fine. Bigger picture, they're, I think structurally they're okay. But it's just clearly more of a flight to the risky assets like technology, semiconductors, things with growth as opposed to the staples and defensive plays. Now, looking at some of the individual names, Apple, nice continuation. Extraordinary continuation this week, 5% to the upside, really putting behind this support level. And it's great because if you are an Apple bull, you just have a clear line in the sand here to measure risk against and to be long against this $92 level. Again, you want to own Apple. I think you have a clear out. If things don't work, you know where to exit. So Apple looking good. It's into the gap here. I'd expect this, eventually to get filled up here all the way up to 103. You can see momentum is clearly to the upside. Let's see if that continues heading into next week. Google is another one that regained some momentum, particularly on Friday. Had a nice standout day because technology wasn't as super strong here in some of these big names on Friday, but Google was, and you can see it's back now to, I would call it just basically to its earnings gap. I know we had, this push up here all the way to 755 on earnings day, but really it took out all of these prior closes and probably wants to get back up here and maybe head to the top end of this range, fill this gap. So Google looks like it's got momentum to the upside. That, looks newly pretty much in play here. Netflix, also another one that's finding pretty extreme strength. Look at the candles here. All the way from last Friday, very, expansive green bullish buy days. I mean, this is just textbook kind of what you want to see. That shows urgency, that shows demand into Netflix right here. So these are real constructive, no overlapping candles there. That's exactly what you want to see. Certainly extended, but momentum clearly on the bull side. So Netflix certainly looks good. Again, the bigger picture Netflix is still very uncertain. It's just in a trading range. It's tough to even make too much of this. You just have, kind of random. You don't have, you really don't have a trend in place here. It's still just trying to figure out its way. So it is in a larger term trading range, but see what becomes of this. Long term, we know the trend is higher in Netflix. So let's just see how high this can move here in the short term. And then next, let's look at Twitter, which had a very impressive Friday here. We're lucky enough to be long this name. Coming off of, we got long here on Tuesday, on this reversal day, as it rejected these lower breakdown all-time low prices. That was sort of our signal to get long, and we managed to, we did take half of this off today. Just locking in some of that profit, but it did snap this trend line, getting close to the open gap that was in place from its earnings. But this candle certainly shows that there's some interest in Twitter here in the short term. Perhaps we have a nice bottom to work against. Who knows if it's the bottom, but it certainly looks good for now to have some of this supply underneath us. And we need to see Twitter now hold above 1450 or so. And as long as it can hold above there, then hopefully looks constructive to head higher. And then finally, or actually we'll look at two more. Alibaba, this one really interesting here, was a nice breakout candidate here on Tuesday. Did everything it needed to do to sort of convince the bulls that this thing wanted to move higher. And then it had this big rug pull off of the SEC investigation. And then I think, comments back and forth. And ultimately it just ended the week back up here. I mean, it's a lot of back and forth. It's quite volatile. It's certainly news kind of headline driven here, so you got to be careful if you're taking a position. Rumors or facts or whatever the case is can come out on both ends here, so you just need to be careful. As far as the technicals go, $80 though is clearly an important level. It's above that, so on a technical basis, you have your trigger, you have your quote breakout to work with. You just have to understand that there are some sort of inherent risks behind this stock right now, given that it is sort of in a headline kind of spotlight. So just be aware of it. I'm not long it. I like it above 80, but just going to pass. There's plenty of other names in play right now. So I'm not desperate for a setup that I think, I want to just kind of stay clear of some of those risks. But it looks good, and especially the way it chopped people up, especially this was a brutal kind of day. Maybe that gives it the fuel with enough people off sides and not wanting to chase it right now, to give it the fuel to head higher. And then finally, GoPro. Haven't talked about this one in a while, but just wanted to bring it to people's attention. Clearly, the long-term downtrend is nothing but horrible. But, it did break to new all-time lows here in the month of May, and then quickly kind of recovered the all-time lows, which were previously this day right here back in February of 2016 at roughly $9 flat, and it did push back up to $10. And you can see this is where it carved out a lot of support in here in January and early February. So I think if GoPro can start to rally above $10, hold above 10, perhaps again, similar to Twitter, you have this overly beaten down long-term downtrend stock that could be signaling that some type of bottom is in. So that might be interesting to some of you guys out there in GoPro. So that's it. That's what I have for today's video. I hope you guys enjoyed. Hope you had a great week. Enjoy. Markets are closed Monday, so enjoy the time off. And thank you for watching. I'll catch you guys next time.